Most traders lose money in the forex market not because they are not good in technical analysis. They lose money because they enter too early and then exit too early. Welcome to An19FS. Welcome to my channel. So in this video, I'm going to dive into GBP USD and show you how best I do analyze the charts. One of the biggest mistakes traders do is that they enter from every demand and supply zone they see in the chart without understanding the overall direction of the chart. And sometimes they end up blaming their concept, saying that SMC doesn't work, this strategy doesn't work, this doesn't work and stuff. But that isn't the problem. The problem lies on they not being able to identify the major direction of the market. The market can be moving in different directions at the same time. What I mean is that in a bearish market on a weekly time frame, the market can be very bullish on the 1 hour or on the 4 hour. Meanwhile, on weekly, the market is very bearish, and traders fail to understand when the market is bearish and when the market is bullish. Now, how do you identify all this? You only identify this by using the top and down analysis from the higher time frame. Even though every day we do mention top and down analysis, but then yet still traders are unable to identify the right top and down, or traders are unable to do the right top and down analysis with the strategy they are using. But here is the truth. A setup is only valid and powerful when it aligns with that of the higher time frame direction. So if you get to understand the direction at which the market is going on the higher time frame, then on the lower time frame, you don't go opposite, or you don't try to capitalize on smaller opportunities, because eventually there happens to be trap for traders to tap in, and then later they serve as a liquidity to the market. So if you don't want to be a liquidity to the market, then I guess you should follow my Telegram community, subscribe to my mentorship, where I teach you the very best way to approach the market without you encountering losses that you are not supposed to even encounter. And there are some mistakes are avoidable. Some mistakes you don't even have to do them as a trader. And if you're unable to identify and know that, oh, these are some kind of mistakes I do on daily basis, then your trading curve is still gonna decline day in and day out, because at the first place you are unable to identify the mistakes you are doing as a trader. And then in this video, I'm going to show you how I do a simple top and down analysis on GBP USD, and you can add up this knowledge to your trading concept. Now, one thing top and down analysis does is that it helps you to trade with the market instead of against the market. We open up the chart each and every morning, and then we want to pick up a trade because we are traders. No, okay, that shouldn't be the goal. The goal is to make money at the right time. So you don't just wake up in the morning, early in the morning, go and sit by your chart, and then you are looking for setups because you are a forex trader. So even if there's no setup, you try to do some skirmishes, some by force analysis, and then try and make money out of it. No, it doesn't work that way, and it's the reason why we keep losing and losing and losing. So I'm going to just give you a snippet of how I do my analysis, like I said earlier. So stay with me to the end of this video whilst I explain everything for you. Sometimes it's not only about plenty chart works, okay? Sometimes it's about, you being able to identify yourself. And once you're able to identify yourself, you'll be good to go with it. Trading is very simple when you understand what the chart is trying to tell you. The chart is always telling a story, and if you are able to understand or decode what the story is telling you, then you are halfway through to success. So quickly, let's go into a chart, and then I show you how I analyze GBP USD in the very simplest way that you can. All right, welcome to my screen. This is GBP USD. So before I begin my analysis, I would like to switch to the most higher time frame, that is the monthly. Others do go above the monthly, but then I prefer using the monthly. And let me just delete everything and then start afresh. Now when you look at GBP USD, there is the overall chart on GBP USD, but then you don't need all this data behind if price is not within the range. So what you have to consider first is a range at which price is trading within. So you can mark out your major key levels, like major turning points. So you can mark and this level as your major support and resistance turning point, and then price is either to go to the upside to this level, or price has to come to this level. So after you have been able to identify this, the next thing you do, or the next thing I do, is that I have to consider where price is coming from and where it is likely to go. So this is done on the monthly time frame, and then you can see that on the monthly time frame, okay, you can't do so much there. So quickly I switch to the weekly, and even before that, there is an area of demand here where price is likely to come and mitigate, because price already took this money from this side, and then there's money transfer now sitting at this point. So price is likely to come to this point before it goes to the upside, right? Good. So having seen this, now we don't expect that price should come the way to this level. Even if price is going to come this way, it has to first pay respect to this zone before it finally comes to this zone. So let's go to the weekly time frame, and there's something I want to teach you guys here. Now when you come to the weekly time frame, price is within a range. The range I'm talking about is that price hasn't gone above this level for you to consider on the data on the left side, and price hasn't come below this level for you to consider the data around here, okay, or the price around this level. So we are only going to concentrate on these major levels, okay, in between these two levels. That is where we are going to concentrate, because price is within that range, okay, price is within this range, and then anything we want to do, we have to factor this price action, just the immediate price, okay. We don't have to scroll back so much to identify whatever, but then we are only going to pay much attention to these levels over here and the prices within this range. Great. So having seen that, now we begin to read our candlesticks, okay. Regardless of the strategy you use, you have to be able to understand the candlesticks, because the candlesticks do tell a story, okay. And when you understand the candlesticks, you'll be able to figure your way out very easy. So now having seen the levels you are going to trade with, let me just mark them with the pay respect to this zone before it finally comes to this zone. So let's go to the weekly time frame, and there's something I want to teach you guys here. Now when you come to the weekly time frame, price is within a range. The range I'm talking about is that price hasn't gone above this level for you to consider on the data on the left side, and price hasn't come below this level for you to consider the data around here, okay, or the price around this level. So we are only going to concentrate on these major levels in between these two levels. That is where we are going to concentrate, because price within that range, okay, price is within this range, and then anything we want to do, we have to factor this price action, just the immediate price, okay. We don't have to scroll back so much to identify whatever, but then we are only going to pay much attention to these levels over here and the prices within this range. Great. So having seen that, now we begin to read our candlesticks, okay. Regardless of the strategy you use, you have to be able to understand the candlesticks, because the candlesticks do tell a story, okay. And when you understand the candlesticks, you'll be able to figure your way out very easy. So now having seen the levels you are going to trade with. Let me just mark them with this ray 2. So let me mark here and the lowest here. So now we begin to read the chart and then understand where price is coming from and what price is doing and where price is likely to go. So now you can see that price has broken structures to the downside over here. Or now, before you continue, you ask yourself, what is price doing? Is it going to the upside? Is it going to the downside? Or is it consolidating? And when you look at the chart, you can say that the market is consolidating or it is ranging, okay? But then you still have to do your markings to be able to tell the real story or the real movement of price. So I mark this level as a break of structure to the downside or as a change of character, where we have an A level being respected at this level. And having seen this tells that price is bearish. If you understand this concept, you understand that the moment we have this kind of setups, we assume that price is bearish. So therefore we look for bearish setups, okay? So that the next thing we saw here is another break of structure to the downside. So now we have price printing series of lower lows and lower highs, okay? Until then, we saw price breaking this last major high over here. The last high that caused the breakout to the downside was taken, and it signifies that price is bullish for the time being. Now let's go to the daily time frame so that you see something clearer. Okay, I want to show you more clear structures. Okay, yeah, so the daily time frame is more clearer. So having seen that the market is bullish on the daily time frame, you see, I said in the video earlier that price could be bearish and still be bullish at the same time. So on the weekly we saw price being bearish, but in the daily time frame or the lower time frame, price is bullish at this point. So after price has created a bullish pattern to the upside, on the weekly this candlestick closed below this level, and that tells us that price is going to be more bearish. Okay, price is going to be bearish. If it should have closed with a body above this level, then the chances that price will go up is very high. But then we saw price closing with this kind of pin bar to the downside, and then also as a rejection on the weekly time frame. So once you have identified such a reaction, what did we see? We saw price break out. We saw a major breakout at this level to the downside. And once you have seen a breakout to the downside, the same scenario that happened here also happened at this point. Okay, so you have to be very patient enough to understand what is happening at every moment. So let me mark it out. We have a break of structure to the downside at this point. And now once you have a break of structure like this, the next thing you should expect, once you have a break of structure like this to the downside, the next thing you should expect is a pullback. Okay, and as price is pulling back, you have to find any confluence to sell price. Okay, either a supply zone or any other confluence that you may find. So you find a supply zone here, and then you expect that it will pull price to the downside, creating another high. So that confirms your sell structure, a series of lower high, a lower low, a lower high, a lower low, and then that continues. So when we come back to the chart, we realized we had a break of structure to the downside. Now as price was coming, because we had a break of structure to the upside over here, because we had a break of structure to the upside, now you ask yourself, what caused the break of structure? What momentum created for this bullish move to break structure to the upside? Okay, so once you're able to identify that, then you are halfway through. So it was this demand zone over here. Let me mark it very well. It was this demand zone caused the break of structure to the upside. Now for this demand zone to be very valid, we want to see it. Now you have to ask yourself, is it a weak low or is it a strong low? Now it is a weak low on the weekly time frame because it wasn't able to close bullish above this zone. Okay, if it should have if it should have closed bullish, or if it should have closed with a body candlestick, then we would have said that this level is a strong level. Now let's factor this aspect also in. Now we saw price to tap this level. As price mitigated this level, to see price to the upside, want to see price push to the upside again, but then price failed to go to the upside because it's being a weak level, it doesn't have that momentum to just go and close above it. Is the reason why we saw price testing this level. If this demand zone was a strong one, then it would have just closed above it. Maybe it would have just reacted and closed above it, but then price failed to close above it and closed below. So having seen that, now the story has now changed to this particular level over here, this supply zone. You see, we are doing everything on the weekly time frame, on the higher time frame. So when you come to the lower time frame, it is very simple for you to be able to navigate. It is very simple for you to be able to navigate your way around it. So now let's just come to the daily time frame, because we have already seen what is happening. Now this demand zone, we said, is a weak level because it wasn't able to break above this level, so it's a weak level. Therefore, if price is coming below, we expect that price will just break below to the downside. Now what do we see over here? Let me delete some of these things and make them look a bit neat. So now when you are to refine this zone, we are going to refine it to this level, and that gives you a second movement. So with every structure, we have price creates movements. So we have a movement like this, and then price will continue to the downside. So the first movement happens to be around this area, and the second movement happens to be here, the third happens to be here. But then I pay much concentration on the second movement than any other movement, and that is one of the concepts I do teach my private students. The second movement is very important. So you want to see price go back again. This will serve as an inducement or liquidity. Price will read it off and then now tap into the second movement. So this is what we are seeing here. Now after price mitigated this level, remember I told you that this is a story you are either narrating to yourself or narrating to somebody, or a story you are reading. So you have to understand every character and the role they are playing. If not, you end up reading the story and then you won't understand anything. So when you are doing analysis, you don't have to rush just because you want to enter a trade. Take your time, analyze everything critically, and then be able to know what you are doing. So when we come off this page, we saw that price was creating series of higher highs, higher lows until this level where price created another break of structure to the upside. Now, if you have another break of structure to the upside, we ask yourself what caused the break of structure to the upside, and that becomes a very important section for you to take notice of. So we had price tap into this level, went to the upside, mitigated this hidden engulfing, and price drop, or a gap and price drop. So price finally came into this weekly demand zone, and then it went to the upside. Now as price was pushing to the upside, what are some of the things that you factor? So you see you have your stop hands being mitigated. It's a stop hands because this could have served as a double bottom, and traders will be buying from this level and their stop loss definitely below. But then price came down to mitigate the stop loss before going to the upside. So this level becomes a stop hands level. It's an area of liquidity. So if you trade double tops and double bottom, when and how to trade it. So now we had price breaking structure to the upside. So now price has broken above this level and signifying that there's going to be more bullish move. More bullish move on that side. But don't forget that we are coming from an area where price has tapped into a weekly supply zone. Okay, don't forget. So always you have to have that at the back of your mind, that price is coming from the weekly time frame. Okay, one of the main mistake traders do is that after they have analyzed from the higher time frame to the lower time frame, now they forget what they did on the lower time frame and they only pay attention to what's happening on the lower time frame, forgetting and going against the main direction of the trend. So after we have seen price mitigated, because price has created a stop hand and a change of character, we expect that price will come. Let me just give you a skeleton. Now we have this, we have a stop hands being created as liquidity being taken out, and then we have a change of character to at this side. Now what do we expect? We expect that price will come in here and then go to the upside. So over here there are going to be a lot of confluences that you should be able to find out which one works best with you, and then you trade with it. So sometimes it's best you can work with the Fibonacci, or you find any other levels, then you trade. So price can as well come to the QM level at this point, mitigate to the QM level and go to the upside, or a gap level, or any internal level here that may suit you. So for me, I'm going to mark this 2 levels here. I'm going to mark this level, that's a gap level, and you see that price has already mitigated it, and then there's another gap level too at this point. I'm going to mark this one too over here, and you can see price has mitigated this and couldn't push up to the upside. But then if price should come down again, then I'm going to look at taking my trade from this level to the upside. Now let's go back to the higher time frame story again. Now after price has mitigated any of this level and it's going to the upside, now let's look at another scenario happening here. You see, I always tell you that don't go so much, don't scroll back plenty, just work within the immediate data around you. Now what do we see here? We see price has created an inducement, cleared liquidity to the upside at this point as a stop hand. Just the same thing over here, the same thing is happening here. What do we see again? We have seen price break below this low. This is a strong low. Okay, if a strong low has been broken, then what does it tell you? It tells you that the momentum that broke that low is very strong, and then it should be considered. So you ask yourself, what caused the break of structure to the downside? And now it is this supply zone. So now within this region, just the same thing I have talked about. Now after price gives you a break of structure to the downside, you ask yourself what caused the break of structure, and then you find your confluences around this level. So you wait for price to push back into any of this level, and then you find your trade. Okay, the same thing happened here, and the same thing also happened at this level. So now let's concentrate on the immediate price action. So now you can mark your fib with these 2 levels and then find the coordinates, which one works best with you. So the high to the low, and then I would like to work with the 61.8 level. Okay, so this around the 61.8 level. So I just have to delete my fib. Now I know where I'm going to pick my trade. So this is where I'm going to pick my trade. So if I'm to align this very well, this is also a gap level on the daily time frame. So I just have to draw my gap level here. Oh, right. Now this is going to be my entry without any refinement. So now going back to the 4-hour time frame, and see I already have my zone being marked. Okay, I already have my entry being marked. Now on the 4-hour time frame, I still have my first entry and then second entry. So my first movement and second movement. So this happens to be my first movement. Okay, and this area happens to be, this whole area happens to be my second movement. But then price, we had a marking from the daily time frame, which is this line, and then if I want to refine it, then I'll refine it to this gap level at this point. Still, my stop loss is going to be above this zone or this high. Now yesterday I saw price tapping into this particular level over here and gave me 50 pips. It gave me 50 pips, and now it is dropping again. So I'm still standing by to see if price can push to the upside, to this level, then I sell. Push to this zone, then I sell to the downside. Now, one thing you have to know is that in selling from this kind of points, because of the wide range, the stop loss is going to be a bit higher than expected. So let's check the stop loss range. If we are to go above this level, that's giving us 47 pips, or let's make it 45 pips. On currencies, 45 pips may seem so high or too much, but then if you have traded gold recently, gold has been very volatile and you are not getting any stop loss less than 50 pips. You are getting it about 50 pips, 100, sometimes even 200 pips as a stop loss. So if on currency you're having 50 pips or 45 pips, targeting this level as 250 pips, that is fine. That is 1:5 risk to reward. Okay, almost 1:6, and that is perfectly good if you are risking something like this, 45 pips for 260 pips. So if your stop loss, or if your account size is very small and you cannot accommodate such a huge loss, if price should hit your stop loss, then it's best advised that you use a smaller lot size for this particular trade, or better still, you wait for another confirmation. I don't want to use so many confirmation on this trade because there has been so many breakdowns from where we saw price coming from this zone on the weekly level, on the daily level, also being refined, and then coming again to this side. If you want to refine so much, you end up losing the trade. So I just want to go with this entry level. So that's going to be my entry zone, and then we'll add a TL to find a confirmation or a sniper entry. And then the TL, mostly I don't give TLs with my main community, it's only for my private. So I'll find a TL for this particular trade, and then that will be it. But then the zone still remains. So if you want to flip account, you can just layer the positions inside this zone, or better still, if you just want to scale up your account with a good risk, just put 1 or 2 positions there with your stop loss above the zone whilst you target the buy level at this point. Now, the next scenario, if price should fail for this, then we are targeting the first zone. Okay, we are targeting the first zone, and that also gives you, let me see, more than 50 pips. But with this one, we can refine because the zone is very, very big. The zone is very big. Okay, so 50 pips is still within the range, but then I think when we go to the 30 minutes time frame, we can refine this particular zone. So even on the 1 hour, you can refine to this supply zone here. And one thing I don't like to do is over refining, because sometimes you will over refine and then you end up losing the trade, missing the trade. Rather, price will not come to your refined entry levels. So that is what I would like to do. So this is what I would like to do and expect on, or this is what I'm expecting on GBP USD for the coming days. Today is Friday, probably next week. That is what I'm going to expect on GBP USD. So this is how I mostly do approach the market. Start from the monthly time frame, come to the weekly, daily. But before I even come to the lower time frame, my entries are right spotted on the higher time frame, and this gives me the enough precision to have patience in the market whilst my entry points are in check. It gives me enough patience to monitor or even ride with my trade. Most of the time, if your entries are guesswork, that is when the little drawdown, you begin to fumble, you begin to shake and stuff. But then if your entries are right on the higher time frame, you don't fear so much, or you don't bring fear in your trade. Now, if you like this video, make sure you follow this account, subscribe, leave a comment on what you want me to treat, any topic you want me to treat. You can leave a comment in the comment section, and then as well you can share to traders out there who may want this kind of knowledge. See you in the next one.